Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, January 29th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. We're still in a very narrow range here at the highs of the range. You can see right here, very narrow price action. 1, 2, 3, 4, 5, 6 days here of compression. We have a 5-day narrow range reading right now that shows 51% of average, just 60 points over the last 5 days, and a likely compression ahead of this week's big FOMC statement, rate decision, and press conference. We also have the NFP report and also a slew of earnings ahead, including Microsoft and Google on Tuesday, Apple and Amazon and Meta on Thursday, and more. So big tech here this week with a ton here to look forward to. A lot of compression right here with an upward bias still, which again continues to mean that even if we were to break down here, there's enough cushion here for bulls to continue to defend and push this thing higher until proven otherwise. A failure at that level, a failure to defend, say 48.50, opens up a return to 4,700. That's been the framework here, but we've been just stuck in a super narrow range. Again, 60 points of total range over the last 5 sessions as this thing continues to build out ahead of this week's Fed. We could continue to see compression here early Monday and Tuesday. Wednesday, we could see quite a bit of volatility late in the day Wednesday and especially on Thursday. So that's going to be how this thing kind of plays out. And with NFP Friday, we could have a Wednesday, Thursday, Friday combo of high volatility price action, especially with earnings on deck. So right now, compressing here with an upward bias. Any pullback could still be a buying opportunity as this thing continues to stretch it toward 5,000 up above. We take a look here at the NQ. Similar price action for the NQ over the last several sessions here. 59% of ADR over the last 5 sessions. If we make this 6, it'll further quantify the last 6 days here. You can see how compressed it is. 50% of average range and just a total of 384 points. You can see how this thing has gone from compression to expansion, and here we are again compressed. Last time we were compressed on a 6-day basis here, this thing exploded for 1,100 plus points there. You can see right here. This time around, we could be looking at something similar. A big push into about 900 to 1,100 points of range could be up ahead once we get out of this range. Now again, on a Monday and Tuesday, we could continue to build out this range and become a 6, 7, 8-day range, and then Wednesday could be a much bigger breakout opportunity up ahead. Now, like the ES, any pullback could still be a buying opportunity here. 17.2 could still be a buying opportunity until proven otherwise. 17K, the previous year's close price, could still be an area where bulls want to defend. Failure here, and you're opening up 16.4 and down below. But this market continues to work higher toward 18K, which is just above here, and we could continue to see new highs ahead, especially if bulls defend the early pullback. We take a look here at crude oil. Crude right now down 0.5%. This thing gaps up here Sunday evening, is filling the gap, and it's a pretty aggressive push now into Friday's range. Now, this market has been quite bullish. We had it as a rounded bottom candidate here. We had the failed new lows as buying opportunities, and we were looking for price to push through the 76 level, and we finally did Thursday and Friday. We now reached a high here of 79.29 here last evening. Now, the upside targets are still above. We have the previous year's midpoint here. That's just shy of the $80 level. That's also where the key range high is. So we're just coming into that key range high at 79.60. And we also have, should price push through those levels, we have the upside targets at 85.55 and 91.5. So any pullback could still be a buying opportunity ahead. We got a great uptrending market here. Even with a bearish start here to the week, any pullback could be an opportunity for bulls to defend and squeeze this thing higher. So still looking for strength ahead, but $80 still the big level here. If we can't get through 80, we may need to pull back a bit deeper here as this thing builds out for a breakout attempt through 80 at some point. All right, taking a look now at gold futures. This one took a rollover gap up after sealing off the previous week's low here at around 2004 last week. Now trading back into the larger key range. The larger key range here has been in play since day one rejection and week one rejection. We have our strong low and the midpoint here. So 2070 is the midpoint between two major extremes here. This market hasn't even been able to test any of the key edges. So we're still inside the range with a bit of an upward bias at the moment, and it really looks like a jumbled mess here at the moment. With an upward bias, perhaps we can get up to 2070 and retest recent resistance. Bears have been defending on every turn, but really haven't been able to force price much lower. Instead, again, falling just shy of 2000, falling shy of the key range low. So right now, a little bit of a jumbled mess as we trade around the 2050 level. Perhaps a little bit of upside could be seen into the 2070, but in this zone here, be a bit more careful and cautious as this thing continues to chop around back and forth without a whole lot of rhythm or rhyme. Lastly, looking at the YM. YM here has been super compressed at these highs. 55% of average range, 463 points of total range, and really that 460 points of total range came in the last two sessions. Thursday, Friday engulfed, because prior to that we had a very narrow range. This range here, very narrow coming into the RTH session, just 103 points of total range right now heading into the RTH Open. This range has developed, the narrow range has developed at the top end of the wider 6 or 7 week range right now, and at some point we got to get a breakout here. Does it push us down into the range for an expanding range back up, or do we continue to see this thing expand to the upside? So right now, keep an eye on this range. We're likely going to continue to stay mostly within the boundaries of the 6-7 day range here over the next couple of days, and again as we head into earnings and the FOMC statement and rate decision on Wednesday, NFP report on Friday, we likely have ourselves a breakout from this range and quite a bit of volatility later on this week. All right, everyone, that's it for now. We'll see how this plays out here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.